TD Bank became the largest bank in U.S. history to plead guilty to money laundering violations. They paid $3 billion, which is now the most any bank has ever paid for money laundering violations. And they are now only the second bank to have an asset cap imposed on them after Wells Fargo over 6 years ago. Although it should be noted that the asset cap on TD Bank is only limited to its U.S. retail bank operations, so it's sort of a smaller asset cap than the one imposed on Wells.
Hey, Paul, how much does this impact what investors kind of their view of TD? $3 billion is a big number, Elliott says, but they got $120 billion in market cap. So what do you think?
Yeah. Hi, Paul. The $3 billion is not that big of a deal for them as a bank. They have 13% of capital ratio, and they reserved most of it already, just shy of a few dollars there. The asset cap is a bigger issue, and it's going to impede growth. Now they gave some ins and outs, what they're going to do, trying to accommodate the new requirements from the regulators. They're going to cut their U.S. assets for those retail banks by about 10%. It's going to be an additional $1.5 billion charge. And even excluding that charge, some of the actions that we saw, when we ran the numbers, it could be as much as another 30 cents on the earnings. So another few percent of the earnings are going to get shaved in next year. And how long is it going to take to unwind? It's going to take some time.
This might be a silly question, Elliott, but like, what did they actually do, and how they actually fixed that part of it?
Like, who launders money anymore? I didn't know.
Yeah, so the laundering here was by Chinese drug cartels and other drug cartels as well. And I think what's notable is that TD Bank employees were accepting bribes from these cartels. Yeah,
wow.
a couple of them were indicted previously, a couple of TD Bank employees. So I think that's what made this sort of a more egregious case, because usually with banks you see that their AML processes are deficient. Here you have bank employees participating in the crimes, and that can get imputed to the bank itself, and that's what made it a worse case.
Paul Gulberg, I'm looking at the stock kind of flat on the year. What's the call on a bank like TD, and maybe just Canadian banks in general?
Canadian banks sort of sitting at a crossroads. As the Bank of Canada started cutting interest rates ahead of the Federal Reserve here, they've done 3 cuts already. They kind of sit in between the two worlds. One is the slower growth and the risk of actual recession, which is kind of minimized at this point. And the other one is the profitability. The loan growth slowed quite dramatically in Canada and somewhat in the U.S. And their mortgage market is a little bit different than the U.S. when mortgages reprice to a higher rate, which exposes consumer to a very different risk. And about 75% of mortgages overall, and a lot of them that were issued at a very low rates during the pandemic, are due to reprice in 25 and 26. So a lot of what's going on and what might happen, people are looking at the Bank of Canada and how well it can actually prevent that from spilling over into consumer pains.
So then based on that, when you take a look at the stock, it's down by about over 2% today. Do we see, it was down about 6%, I think, yesterday. What part of this is reflected in the stock? How much of the macro, Bank of Canada, and then how much of this kind of legal fees, et cetera?
So I think the macro has been reflected in the stock for quite a while because relative to peers, it's been underperforming all year. And the story on the whole kind of the AML story has been around for over a year as well. So a lot have been reflected as well. I think what people were not really expecting is the asset cap. And even though, as Elliott said, it's only the U.S. retail operations, so the assets of those two operations are only about 30% of the total bank assets. It's still kind of unexpected, and that's what's pressuring the stock. They gave sort of clarity in what might be the pressure in 25, but the question is, and this is kind of goes back to Wells Fargo, where every quarterly call, people are asking when are you going to be done with the cap, and we've been out there for 7 years already. So, so what's priced in there in that respect is kind of hard to tell.